Hello traders everywhere, Jeremy Lutz coming from the digital studios of Market Club. And a lackluster jobs report and rising trade tensions have put the stock market in a position where it's ending the week just like it spent most of the week, and that's mixed, with the NASDAQ being down and the S&P 500 that we're taking a look at here being up on the week. And in fact, we have a weekly chart up, as I like to do on Fridays, just to kind of see overall where we're ending the week. And the S&P 500 still has a chart analysis score of plus 100, trading at 2,833.28 presently, up a little over 0.5% on the week, making this the fifth straight week of gains for the S&P 500. And our key level to watch would be 2,789.24. A move below that level would issue a red weekly trade triangle, indicating a move back to a sidelines position for the S&P 500. Moving along to the Dow Jones, currently trading at 25,422.13 with a chart analysis score of plus 85, indicating that overall the long-term trend is up for the Dow, just coming under a little bit of recent pressure. And that has to do with this red weekly candle down a little over 0.1% on the week, making that the first weekly loss in 4 weeks for the Dow. Key level to watch moves up a little bit to 24,979.64. A move below that level would issue a red weekly trade triangle, indicating a move to a sidelines position for the Dow. As we look at the NASDAQ, we got that red weekly trade triangle this week at 7,969.58, pushing the chart analysis score down to plus 65, indicating that we are in a sidelines position for the NASDAQ, and that overall the trend is weakening. Currently trading at 7,790.35, still eking out a weekly gain of a little 0.7% on the week after 2 straight weeks of losses. So even though we had those big hits in the FANG stocks this week, we're still getting a rise out of the NASDAQ, which is a good thing. Key level to watch is 7,933.31. A move above that level would give us a green weekly trade triangle, indicating a move back to a long position for the NASDAQ. Dollar index currently with a gain of 0.4% on the week with a chart analysis score plus 90, indicating that overall the long-term trend is up for the dollar, and currently trading at 94.88 on the day. However, as you can see across the top of the chart here, we have flattened out into what I would consider a sidelines move for the US dollar currently. Key level to watch remains 93.87. A move below that level would issue a red weekly trade triangle, indicating a move to a sidelines position for the US dollar. Take a look at gold, continuing its downtrend with the chart analysis score at negative 100, indicating that overall the strong downtrend is in play for gold. Currently trading at 1,224.30, down almost 0.7% on the week, continuing its downtrend, and in fact it's 4 straight week of declines after a small gain back at the beginning of July. Key level to watch will be 1,233.70. A move above that level would issue a green daily trade triangle, indicating a move to a sidelines position for gold. Moving along to crude oil, currently has a chart analysis score of negative 70, down about 0.5% on the week, trading at 68.38 on the day. Key level to watch remains 69.36. Move above that level would give us a green daily trade triangle, indicating a move to a sidelines position in the short-term time frame for crude oil. We'll back out of here and we'll take a look at Bitcoin. Currently up about 1.8% on the day. However, it is down a little over 8% at 8.5% actually on the week, ending a 2-week rise for Bitcoin with a chart analysis score negative 65. Currently trading at 7,472.01. And our key level to watch, I'll give you 2. We're still looking for the monthly trade triangle at 9,925.55. A move above that level would give us a green monthly trade triangle. I'll give you a new red weekly trade triangle signal, which would come in at 6,333.69. A move below that level would give us a red weekly trade triangle, indicating a move back to a short position for Bitcoin. With that, every success. Have a great weekend, and I'll be back with your market updates next week.